Hi everyone, I'm Andy, and this is the AI Breakdown. Welcome to your weekly news edition, where I'll cover what happened in AI last week and why it matters. Let's start with the bit of news that makes this whole market feel a bit more tangible. OpenAI has confidentially filed its S1 with the SEC, marking the move from speculation to official proceedings. Bloomberg had previously reported that OpenAI intended to go public soon, but the filing on the 22nd of May makes it real. Although it's confidential, preventing us from seeing the financials yet, it begins the SEC review process. Typically, this leads to a public S1 a couple of months later, so we might see a public reveal by late summer, pointing to a September float. And there's a reason the path looks clearer than it did a month ago. Elon Musk had been suing OpenAI since 2024. He said Altman and Brockman betrayed the original nonprofit, and he wanted Altman out. That case sat right on top of OpenAI's restructuring. And that's the restructuring it needs done before it can list at all. Then this month, an Oakland jury threw it out. It took them about 2 hours. Although it's worth being clear on what they decided. They didn't rule on whether Musk had a point. They ruled he'd waited too long to sue, so they won on a technicality. And he says he'll appeal, so it's not quite over. But the biggest legal cloud over OpenAI has lifted, right as it heads for the market. But the financial cloud hasn't. OpenAI was last valued privately at around $852 billion. The talk now is afloat at something close to $1 trillion. Hit that, and it's the biggest tech IPO there's ever been. Here's the catch. When the financials go public, so does the loss. OpenAI is running at something like $25 billion in annualized revenue, and it's still lost money on every dollar of it last quarter. Independent estimates put the capital it needs through 2030 well north of $200 billion. So this isn't a story about a company that's matured. It's a race to convince investors the scale and the demand are real before the bill lands. Now contrast that with Anthropic. It's expected to go public later this year too. The Wall Street Journal got hold of its projections. Anthropic told investors it expects $10.9 billion in revenue for the June quarter, up from $4.8 billion in the first quarter, more than double in 3 months. And it's forecasting an operating profit of $559 million. If that lands, it's Anthropic's first profitable quarter, and it's arriving years ahead of what the company itself was guiding last summer. Dario Amodei said the growth had got too hard to handle. The driver is enterprise demand, and Claude Code in particular. The compute cost behind each dollar of revenue is coming down fast. Before anyone calls this a turning point, read the small print. Anthropic itself has told investors it doesn't expect to stay profitable for the rest of the year. And here's why. SpaceX filed its own S1 recently, and there's a compute deal buried in it. Anthropic is paying SpaceX $1.25 billion a month, locked in through 2029, but the fees are discounted for the early months, May and June, which are the exact 2 months Anthropic is using to claim its first profit, so the profit's real on paper. But a good chunk of it looks like timing. When the full compute bill arrives later this year, that cushion goes. That's my read, not Anthropic's, but it's the obvious one. Now, with OpenAI's regulatory move, and Anthropic's profitability plans, the race is tangible. It's about who gets public first and sets the valuation benchmark. If OpenAI achieves a $1 trillion valuation, every private AI company gets a reference point. Companies like Mistral, Perplexity, Cohere, Databricks, and even the newly combined SpaceX AI entity are affected. There are still real risks here. OpenAI's governance will get picked over, and legal concerns have already been raised by some state attorneys. Cheaper models could squeeze pricing too. If customers decide good enough is enough, defending premium valuations gets tough. But that's exactly why this week matters. Once these companies head for the market, the story gets a lot more transparent. Before we go further, a quick word from this week's sponsor. Notify Technology helps teams manage incidents, audits, and inspections in one place. With Notify Spark, they're streamlining incident reporting and investigations, saving time, cutting admin, and helping teams act faster on what matters. Learn more at notifytechnology.com. Now, onto companies with ambitions to be ubiquitous. Google's I.O. 2026 made it clear Gemini is not just another chatbot, but a comprehensive agent across Google's ecosystem. Sundar Pichai announced that the Gemini app now has over 900 million monthly active users, double last year, and its infrastructure is processing an eye-watering 3.2 quadrillion tokens monthly. The keynote highlighted essential architectural and commercial strides. Gemini 3.5 Flash launched immediately, outperforming the older 3.1 Pro and running faster within Google's coding environment, with Gemini 3.5 Pro expected to debut in June. Google's commitment is clear, powering search's AI mode and AI overviews. The unified Gemini Omni Flash model now accepts various media inputs and outputs. They've said themselves that Omni can create anything from any input, starting with video. You can combine images, audio, video, and text as input and generate high-quality videos grounded in Gemini's real-world knowledge. You can also easily edit your videos through conversation. The universal cart underscores Google's strategy, controlling not just assistant functions, but the intent flow. By leveraging Google's unified commerce platform and Google Pay, users can search, compare compatibility, and purchase across the entire web within Google's layer. It speaks to a controlled strategy, heavily affecting those relying on the discovery and transaction processes Google's Gemini now influences. Google also restructured its enterprise and developer pricing to challenge OpenAI and Anthropic directly at a time when they face IPO scrutiny. They cut the top-tier Ultra plan from $250 to $200 monthly, while introducing a brand new $100 tier to hook developers with lighter usage needs. Google's timing disrupts attempts to convince investors of pricing durability. My read on this is that Google isn't trying to win the AI race by having the smartest model every week. It's trying to win by becoming the default layer where AI gets used. And historically, default layers beat better standalone products more often than not. Google's infrastructure, augmented by its new Google Flow Creative Suite and wide adoption of open data standards like MCP, turns the AI into an embedded ecosystem tool. There are concerns, of course. Privacy is a major one. Gemini Spark requires immense background context, raising trust issues over who should control that data. Gemini Omni's video generation capabilities could also be misused, despite their potential benefits. The bigger problem for everyone else is distribution. OpenAI has the brand, Anthropic has enterprise momentum, and Microsoft has the suite, but Google already sits inside people's daily workflow. When you can bundle AI across products people already use, model quality stops being the only thing that matters. Speaking of unlikely collaborations, let's check back in on Anthropic and SpaceX. Regular listeners will remember we covered their initial partnership announcement a few weeks back, but what began as adversity has officially transformed into absolute enormity. Elon Musk's bitter criticism of Anthropic appears completely forgotten now that SpaceX's recent IPO prospectus, as we just covered, has pulled back the curtain on the actual numbers. The filing reveals a jaw-dropping $1.25 billion monthly compute deal, totaling over $45 billion by May 2029. It's a partnership that still raises eyebrows, especially considering Musk was calling Anthropic misanthropic just a few months ago. When the deal was first announced, both sides kept the financial details completely locked down, but the SpaceX prospectus blew the doors off those secrets, confirming that $15 billion annual price tag and highlighting the colossal infrastructure at play. Anthropic has essentially taken over the massive Memphis-based Colossus 1 data center, and expansion plans into the next-gen Colossus 2 are already underway. This massive influx of compute is what allowed Anthropic to instantly double its rate limits for Claude Code, proving that, in today's AI race, dynamic alliances are driven by capacity control, not ideology. Yet this reliance poses massive long-term questions. What gets me here is the trade-off. Anthropic may be proving that a frontier lab can get closer to real operating discipline, but it's doing it while becoming entirely dependent on one of the least predictable power brokers in tech. So the business is getting stronger at exactly the moment the strategic risk is getting harder to ignore. To make matters crazier, the contract includes a 90-day termination clause, which heavily sharpens that risk. Adding to the complexities, recent Pentagon contract exclusions mixed with Musk's heavy influence on AI policy appear to give him massive leverage, raising serious stakeholder concerns. But when infrastructure control translates to comprehensive business opportunities, powering the back-end infrastructure for everything from Anthropic's core models to downstream developers like Cursor, it affirms Musk's strategic footing. The simple version is this: when compute is scarce, old rivalries get dropped fast. Anthropic absolutely needs this horsepower, but the more it leans on SpaceX, the more investors will ask how independent it really is. Shifting focus to Nvidia, the company's quarterly performance again highlights its leading role in AI infrastructure. Revenue reached $81.6 billion, up 85% year-on-year, and data center earnings hit $75.2 billion. Nvidia also projected a strong $91 billion for the next quarter. Jensen Huang said AI's transformative phase is here. Blackwell is the fastest growing product in the company's history, and that matters beyond Nvidia. It suggests hyperscalers are still spending hard on AI infrastructure, even with concerns about custom chips eating into Nvidia's lead. Right now, the market is still backing the incumbent. For now, Nvidia stands as the industry's benchmark. It gives investors a real read on whether CapEx is turning into actual hardware demand. The longer-term question is what returns customers see from all this spending. Turning to Meta, the company paired deep cuts with a grim AI controversy. By cutting 8,000 staff and cancelling 6,000 planned roles, Meta made clear this is an AI reorganisation. At the same time, their higher 2026 AI CapEx forecasts show where the money is going. Then leaked recordings exposing employee surveillance for model training, backed by Zuckerberg, triggered uproar right in the middle of those cuts. That link is the point. If a company says AI is the strategic priority, shifts spending towards it, and cuts people while using their work to train the systems behind that shift, employees won't see separate decisions. They'll see one strategy and one that treats them as inputs before treating them as costs. Reports from multiple outlets, including labor-focused sources, say many employees felt they were asked to help train AI and then deemed expendable. More than 1,000 signed a petition, and a UK unionisation push began. I think this is one of the clearest examples yet of how not to do AI reorganisation. If employees feel they were monitored to help train systems that then made them easier to cut, that's not just bad optics, that's a trust collapse. Once a company gets there, every future AI initiative starts from suspicion. It stops being a comms problem, it becomes an ethics problem, a legal problem, and a management problem. Before wrapping up, let's glance at a few noteworthy developments. Firstly, the cancellation of the Trump administration's planned AI executive order, following intervention by key tech leaders, shows the ongoing lack of coherent AI policy in Washington. Direct access from figures like Musk, Zuckerberg, and Sachs can quickly outweigh extensive policy groundwork. GitHub revealed a security breach affecting 3,800 internal repositories following a compromised VS Code extension incident. As AI agents integrate into coding, new vulnerabilities emerge, evidenced by this targeted attack concerning Anthropic's Claude code configuration. And finally, Anthropic has hired Andrej Karpathy, one of OpenAI's founding members, and a former Tesla AI lead, to work on Claude's pre-training team. That matters because pre-training is where the base capability of these models is shaped before all the product polish gets added. So this is not just a famous name hire, it is Anthropic strengthening the core research engine behind Claude at a time when the talent war between OpenAI, Anthropic, Google, Meta, and xAI is getting increasingly aggressive. That's all for this week's AI Roundup. If you found value in this breakdown, please leave a rating and hit subscribe. See you next week.